Welcome to the Vitality Vision podcast. I'm your host, Greg Bennett, joined always by my co-host, David Vogel and Barry Miller, the CEO and the president of Voloridge Investment Management and Voloridge Health. And today we have a really special guest. We have the lead strategy manager, Daniel Hammack from Voloridge Investment Management, join us. And it's absolutely a fantastic episode. You do not want to miss it. We dive deep into what AI is, modeling. We dive deep into Daniel's journey from internship all the way to the executive team. It's a fantastic episode. This is an episode for me where I just stayed interested and curious the whole way. There was so much to unpack in this one. You don't want to miss it. I hope you enjoy it as much as I did. Daniel, thanks for joining us, mate. Great to have you come downstairs into our new studio. We've had only one other Voloridge employee in the past, and that was Tristan, who's our physiologist. But to have you come in from the research side, from the Voloridge Investment Management, is a real thrill for us. So thank you for coming in.
Thanks for having me.
All right, mate. Well, first up, let's rewind the clock a little bit. You were our very first intern, and you've been here now 12 years, coming on 12, is that?
Let's see. So it was 2011.
Oh, more than that.
15 years now.
Yeah.
Over half his life.
Oh my gosh, you're getting
Roughly
old.
half.
Roughly
half his life.
Yeah.
But tell me, mate, let's go through the journey. You started here 2011. I'd love to hear from how that first came about, because this was a very small company. I don't think what you had.
It was like a company of like 3 or something.
Was it David and Barry?
I think that era we probably had about 15 to 20.
People?
Oh,
By
no.
2011?
No, I think when Daniel came in the office, I was the only one.
Dave was the only one.
Yeah.
In Orlando?
In Orlando.
Eventually,
yes.
Mike Burns was also in there.
Yeah.
I think Todd came like once every quarter or something. But
And were you high school? Where were you?
yes.
Oh, you're right. Yeah, if it was 11. Sorry, I was thinking like 15, like 2015 when we had the Orlando office. But yeah, in 2011, absolutely, there was 3 or 4 of us.
And so what made you think of even having an intern program at this point?
Oh, that's not happened at all.
It's not called a program.
Here's how it happened.
No, it's called a program.
Yeah, here's how it happened. I was doing a science fair project, as I assume every high schooler does. It was during my junior year of high school. I was presenting this project at the county level exhibition. So it was like in this mall near where I lived. And because it was big, there was a lot of students from a bunch of different schools. And so, we all had our project board set up, and the judges would walk around with their clipboards and ask us questions and jot down some notes and stuff. And it was a good time. And so I was there doing the whole thing, and this guy came up to me, and he asked me some questions about my project. They were pretty good questions. But he didn't have the clipboard. So I was like, what's going on here? This is weird. So then this crazy guy, he walked away.
Crazy guy.
And then he just kind of stood in the corner and did like this for a little while. And then he came back over later and he's like, do you want to intern with me? And I'm like, who are you? And he said, oh, my name's David. I was like, okay, what do you do? Like, I just started a hedge fund. I was like, what's a hedge fund? So that's how I met Dave.
I'm going to make sure next time I recruit at a science fair to carry a clipboard. Taking that very seriously.
Very good idea.
Yeah.
And Dave was just there because his son was also doing the science fair at a different school.
He was in a middle school. Did a middle school project. And I said, let's walk around and check out some of the high school projects.
Yep.
And wasn't your project to predict the book based on a transcript or something from
Close. It was very basic natural language processing, NLP, they call it nowadays. My project was I downloaded I scraped a bunch of data on articles written by a couple different authors online. And I was trying to analyze the writing style of these publications and build a system that could say whether 2 things were written by the same person or if they were written by different authors based on how similar the writing style was between them. So obviously I didn't really have a good mentor when I was doing this, so I kind of all just cooked it up myself. So the first year I went through it, it was all very just crazy stuff. Like tens of nested if statements and just total craziness. And then one of the feedbacks I got during the judging process that year is like, one of the judges said, "Have you ever heard of this thing called machine learning?" And I was like, "No, what's that?" And he's like, "Look into it. I think it would be good for this project." And so I did look into it, and it was good for the project, and it was also good for my career and everything else. So.
And so from that moment, from the science fair, you said yes to the intern, and how quickly before you joined David and Barry and one or two others?
Yeah, I was like, that sounds interesting. I'll do it. And it was maybe a couple weeks later, we had our first meeting or two, and Dave gave me, I think the first project, he gave me some data and some proprietary binary format that we were trying to use, and said like, "Hey, get this data out of here and make it clean so we can use it," or something. And so started with data work.
And he was successful? David, do you remember that first?
Absolutely, yeah.
Yeah.
So and
I've never failed.
started with data tasks and some programming tasks, and got into some serious machine learning tasks, and it just evolved from there into where he's at today.
So when you were at that science fair, there had to be something that really stood out to you about Daniel beyond anybody. Was there other people doing similar work in this science fair, or was everybody on all different tangents?
It was all over the place.
Yeah. But something jumped out to you.
Yeah, for me, it's more when I'm looking for employees in general, interns, employees, I'm looking for the ability to really think critically about a problem. And I'm looking for problem solvers more than how much do they know. And then I'm also looking for that general machine learning interest. So I saw both. I saw that ability to really think through a problem well. It was I think Daniel had solved the problem as well as he could without knowledge of machine learning, and so I helped add that element. But the fact that he was also very interested in it, willing to dig in, that made him a good candidate. Mm-hmm. And so to this day now, I think the best place to recruit interns is at a high school.
High school. So if you've missed high school, too bad. No, you're in college, too late. No, that's awesome.
And Daniel's a testament to, I'd say, our ethos here as a firm, right? Daniel went from getting dropped off by his mom as an intern, working with us, to he runs our strategies, many of our strategies, including our equity strategy, and has ascended to the top of the research team here. So there's no limits, and he's a great example of how talent can find its way into the firm and have amazing impact.
I think what's important right now for people that maybe haven't listened to all the episodes before this one is to understand where Voloridge's growth, from what I understand, the first 5 years from 2009 to sort of 2014 were steady. It was kind of trying to build, but then you really hit this hockey stick curve. Is that fair enough? Around that sort of 2014, 2015. Yeah. And so someone like Daniel was very early stage in that, and you've all enjoyed the ride together. Yeah,
it was super useful, informative for me to have exposure to machine learning so early in my education and career, because I basically, after the first year of not having a really good mentor, the next year I had David Vogel as my mentor. So obviously the project was much better. It went to the international level of the fair and everything. But basically I learned from Dave was the general broad applicability of this idea of machine learning, where you start up by setting up the problem, gathering a bunch of data that you want to model, throwing it into one of these predictive modeling algorithms, and you can basically solve or attack any problem in this structure by just first collecting data and then training a computer to find the patterns. So I was really impressed by just how broadly applicable that idea was to kind of everything.
I want to shift gear a tiny bit here. We're talking about you being an intern. We have interns today. How different do you look at them and go, "Oh man, you've got it easy," or how do you look at the intern program we have today, where, from what I understand, last year, you know the numbers, was it like 20,000 applicants or something for 30 positions, or I don't know.
It was the hit rate or the acceptance rate was lower than Ivy League schools. I'll have to go back and see what the exact applicant.
You put it up on
counts.
on one of those monthly updates. I had it in a trivia question for one of our shows here. But tell me, do you look at it kind of and smirk a little bit? I mean, I see your face right now.
So when I started, it was a little different. I got paid $12 an hour, and I had to negotiate for that. Really hard, by the way.
And that was a lot for the company to pay at the time.
They could barely
It was a
afford
big
I was
it.
pretty hefty.
Nowadays, the intern classes, like there is an arms race for interns, 100% absolutely. And for really, really good reasons, which I can explain. But basically now they're getting paid $150. Next year, it'll probably be $200 an hour. It's crazy the amount that the compensation has gone up. And it's for really good reasons. So in our business, hiring the best people can make a huge impact on our bottom line. The difference between having the best people and having like good people is huge. And it's very expensive and very risky for us to take people, train them up on our kind of core IP and our secret sauce, and then let them work. So we really have a really strong preference to like fire as few people as we can. When we kind of commit to someone, we want to commit to them forever. And so what we found is because hiring is just so hard in general, you can talk to someone for a couple hours and then they show up and they can't do the work or whatever. Hiring is just really, really hard. So what we found is if we hire mainly through internships and fellowships, by the end of an internship or a fellowship, we have a much, much better idea of how someone's going to fit into our team and how successful they'll be here compared to if we just, apply our normal interview process. So we have a very, very rigorous process, both for interviewing for the internship and then a very structured process during the internship to really evaluate people and push their limits and see like what their potential is. And the net result of this is like we invest a lot in it. But once we get someone through that process, we're very, very confident that they're going to kind of work out here.
So when are you heavily involved in the internship program yourself?
Yes.
Being you are the golden child to some degree, the one that brought it all the way through.
Chief intern, they call me.
Chief intern. But you must get the questions from them going, as somebody who wants to intern here, go, well, Daniel's the guy to talk to. What was the journey like? And has that process changed from when you saw something in David and said, I need a mentor. He's a mentor. Do they come to you and say, well, hang on, I see a mentor in Daniel. Do they get to work with David as well? They see this opportunity.
Yes.
Yeah. Because I think when I think of an internship, it's like it's one thing for the company to be getting something, but the individual's thinking, well, what do I get from it as well, right? Like obviously getting paid a decent hourly rate is nice and all these things, but from the data science world and the problem solving world, you want great mentors.
Yeah. Not only do you get paid ridiculously well, and you get to be here like in paradise for 3 months or whatever, but we do a lot of mentorship and we work very closely with our interns, which is important because we need to really assess that they will fit in well here and that vice versa, they like working here too. So we work very closely with them, and we've gotten some feedback from interns in the last few classes. Like, in the first couple weeks they've been here, they've learned more than like semesters at school, just because it's like so new. There's so much to learn, and we kind of throw you into the deep end research-wise.
Yeah, they're not just going and making you coffee. They're coming here to actually be applicable work. Yeah,
we give them really hard problems to work on.
Yeah,
that's cool. I've had a few interns over the years say at the end of the internship that they were shocked at how much meaningful work they were given and the impact that it had. They got to see something in a short period of time go into production, and obviously that's where people want to have an opportunity to have that kind of impact. And to add a couple things to Daniel's points about our internship program. So it's grown dramatically, as we all know, around this table over the last 2-3 years for the reasons that Daniel's mentioned. It's about 20% of our overall headcount now, so 30 to 40 interns each year. So it really is becoming the lifeblood of new talent, or for new talent.
Yeah, and I think one of the things that makes us different and unique as a firm is we don't really hire laterally very much from our competitors. So a lot of the industry does this all the time, where they kind of poach people from competitors and throw them into a team together. And basically what you end up with is every different firm in the industry is like more or less arriving at the same answers, same solutions, because they've all poached from each other and they're all kind of mixing together. We prefer to grow kind of our research talent internally and organically, starting from people that have no background in the industry at all, which is kind of made us like a isolated island of alpha, you could say. I was talking to someone, a peer in the industry, maybe you could say they're a competitor, and I was kind of describing this, and they're like, "Oh, you guys are like the Galapagos tortoises or something." Yeah, sure. Because we basically evolved kind of independently from everyone else.
We're really looking for the best thinkers, not the best finance people.
For sure.
Because the best thinkers can learn the finance part.
Yeah.
They're often PhDs in physics and math and other scientific fields where they've demonstrated that ability to problem solve.
Yeah, the finance part is the easy part of the problem. The hard part is the critical thinking, the intuition, the kind of rigor.
Speaking of peers, I was speaking with one of our peers at the largest firms in our industry, and just the other day, and they said, we were talking about our internship program and the size of it, and they were shocked at how large our internship program is relative to the size of our firm. So I think we are doing something fairly different in the marketplace, on top of the things that you mentioned.
And you mentioned it earlier, Daniel, the cultural, like the fact that we're down in Jupiter, Florida, it is a cultural difference. You could tell me the competitors, where are they? Are they mainly Northeast or like in the finance sort of New York? And
well, some are coming down to Miami.
they're coming down slowly. They're making their way down. Yeah.
And West Palm too.
Yeah. Well, we're still at the frontier of it all. Yeah. But Daniel, you also look, at the end of the day, we have Voloridge Investment Management, which is huge success, and credit to all of you. But, we have Voloridge Health, which is building out using the same kind of concepts of modeling. But you have a bit of a background that you've also dabbled in health in a competition you're going to tell me about a little bit more, where you finished on the podium, second, I believe, in a predicting lung cancer.
That's right.
Tell me about that. What was that about, and how long ago did you do that?
So this was back in 2017, so almost 10 years ago now. And to set the stage, this was after deep learning had really kind of been invented again, and started to become popular, mainly for image problems. But this is way before the transformer and the LLMs era.
Can I interrupt? Deep learning, can you just quickly, can one of you tell me what that means?
Yeah, it's a machine learning technique where the basic idea is to A, gather more data than you've ever had before, B, build bigger neural networks than you've ever had before, and C, just train it longer on better hardware than ever before. So neural networks have been around a long time, since like the 60s or so. But it didn't really, they had a brief wave of popularity in the 90s, before my time. But Dave remembers.
My early career was all neural networks.
But they kind of fell out of favor for a while. And the reason for that was really that I think the hardware wasn't there. And later again in the 2010s, there were some breakthroughs around like AlexNet, and AlexNet was the name of the model, and convolutional neural networks for image processing that were inspired based on how the kind of human retina works. That had some just amazing breakthroughs, and that really kicked off the whole modern kind of deep learning renaissance. So anyway, this was kind of in the middle of that early hype cycle. And so I was playing around with these tools, obviously, and I had done fairly well in a couple image competitions already. And so this one came out. It was called the 2017 Data Science Bowl. So it was like their premier competition, their Super Bowl. They had it annually back then. The headline was like, it was $1 million prize pool, and it was working with 3D images, like CT scans. So I thought both the $1 million prize pool and the 3D.
Well, especially when you're on $12 an hour,
yeah,
that really helps.
Right? Oh, he was making big money.
Oh, I'm kidding.
Big money, I don't know. So I was interested in both aspects of that competition, and So I worked on it, and back in the day when I didn't have a family, didn't have kids, I could just work on these things like crazy. So I spent a lot of time on this competition and learned a lot, especially about modeling, images of multiple dimensions and stuff. Got to play with all the latest neural networks and architectures and hardware. And we did quite well in the competition. Towards the end, I teamed up with another competitor who I'd worked with before, who was a good modeler as well. And we got second place, although we really should have gotten first, and I can tell the story about that later. But yeah, the basic idea of the competition was you're given CT scans, lung CT scans, of a bunch of patients, some of whom will develop lung cancer in the future and some of whom will not. And your model just has to consume these scans and predict whether or not you're going to get diagnosed with lung cancer, or what probability.
Yeah.
And then you're rewarded based on if your high probability ones turn out to actually have cancer, and vice versa.
So how close did you get? That's fascinating, because we can go into first, second in the competition, but cancer is one area that we're not in Voloridge Health. We're not actually doing right now. It's definitely on the horizon, but how accurate did you get in this competition that they're like, wow, we could actually use this?
Yeah. We had a negative log likelihood of about 0.4.
Okay.
Does that mean?
That means it was more accurate than a human.
Than a doctor, yeah.
Can
Nothing against doctors, but
I was mainly joking, but
No.
it wasn't really judged on accuracy because the distribution of cases was very unbalanced. So if 99% of people don't have cancer in the first place, if you get 99% accuracy, you're actually not doing well at all, right? So there's that whole problem. So accuracy wasn't really the best measure, but bottom line is the systems that we built in the competition and that other competitors built as well were definitely state of the art at the time. Nowadays, I'm sure it's much better. But.
I'll have to send you an article, Daniel, in case you didn't see it. It was probably a month ago in the Wall Street Journal, within the last month, about how hospitals are essentially AI labs, and the proficiency of radiologists. They're saying AI, as we hear often now, is not going to replace humans. It's just making us way more efficient, right? So they were saying that the same physician or radiologist that maybe their throughput was, to look at, I'll just make a number up, 100 scans in a day. Well, now they were looking at the same 100 scans, but all of the ones they were looking at were, flagged by the AI.
Like really interesting cases. Yeah. Well, I see that you're saying they're not going to replace humans, but if one radiologist can now do the work of 100 radiologists
there
before,
is some replacement.
it's happening.
Yeah,
and it's going to happen elsewhere too.
Yeah.
We can talk about that later if you want.
Yeah.
Now let's talk about that now. I'm actually fascinated by that topic.
Okay.
I know it's not on our notes here, but I'm actually fascinated because it is a topic that's been brought up nearly in every cocktail party I go to, which is no cocktail party, but what I'm trying to say. People are bringing this up.
Well, let me ask Daniel, because I was probably a year ago concerned, that our firm was behind the eight ball, and we all had healthy skepticism, right? And I think things have advanced relatively quickly. But Daniel, if you could walk us back to 3 months ago, maybe even 6 months ago, what was your perspective then versus now on AI?
Yeah. So obviously we pay really close attention to the developments in this field because we're a machine learning kind of hedge fund and generally more a machine learning company. So any new advancements in machine learning are of keen interest to us. So we've been tracking the large language models since the beginning. And in the beginning, they were kind of cute. Like it was almost like a toddler learning to talk. It was like you could send in a prompt and it would kind of babble back to you and mostly coherent
a little bit of
English
hallucinogenic
and with kind of funny mistakes.
Yeah.
And then they got better. They kind of turned into like teenagers almost, where they gave you like fairly adult-like answers, but sometimes they were confidently wrong and
with attitude.
You'd laugh at
with attitude.
Exactly. You laugh at them like, you're so silly. And then they got better. And then they're like competent average adults, and you're like having a conversation. You're like, wow, you actually know a lot about a lot of different things. Like the breadth of your knowledge is impressive. It's more than my breadth of knowledge. You can speak 200 languages. I can speak one. It's like, okay, cool. And then they got better. And now, with the latest generation, and it's February 2026. This is going to be vastly different later.
This is not an evergreen episode, yeah.
But right now, we are actively using LLMs for kind of like Claude Code and Codex and Copilot to improve our velocity of writing code. And in the latest generation, it's like a force multiplier on what one person can do, where one person with these tools can do like the work of maybe 3 people, and they're only going to get better.
Yeah.
And next year, maybe it's going to be 10 people. And then, at some point, you just cut the human out of the loop entirely. The analogy I like to draw is like, have you seen the movie Margin Call? One of my favorite movies.
Yes.
I have to see it now.
What? It's like a finance movie.
David's never said he's a finance guy.
Oh, man. It's good. So you'll have to watch it. Anyway, there's a scene in this movie where they're like driving around in the car, looking out the window, and like the main guy is saying like, look at all these people walking around. They have no idea what's about to happen because they're like at the precipice of the great financial crisis or whatever. And they know, but no one else knows yet. I feel like we're at that point where we are working with these tools and we know this is crazy.
Did you read the paper that came out that caused some of the market downturn yesterday? It's a Trini research. It was the one I sent to you, Dave.
It's,
I mean, it's a fictional story, but it's...
There's a grain of truth in it.
Sure.
And it's like something big, really big is coming. And we're just starting to see like little glimpses of what it's going to be like. And it's very hard to know exactly what's going to happen. But we do know it's going to be big. Yeah. Like if you think back, I'm going to draw some analogies here that may be a little crazy. The Industrial Revolution. This was like almost the commoditization of muscle power, or like the commoditization of energy and power. Where before this, a lot of things were just done by hand by strong people. And after this, they're done by machines. What we're going through now is like the same thing, but for intelligence, for knowledge work.
Knowledge work, yeah.
Where things that used to require a really smart person, you can now just ask your computer.
Now, we're a predictive modeling company. Can't we figure this out before everybody else?
Figure it out?
Yeah, predict the future. Like you're saying something big's coming. Can't we figure out through data what's actually going to happen? I'm putting this on you guys because
I would say like with machine learning, the intelligence of the user behind it can guide it to do better things and be competitive. So I see it the same as with the language models. With a good team to guide it correctly, we should be able to stay a step ahead.
I think about one thing that is just to help Greg kind of think through this problem is that if you think about machine learning, it's generally looking for patterns. The emergence of this technology is so fast right now that those patterns may take some time to develop. Is that 6 months? Is it 2 years? So there's some gestation period that we have to go through to identify these new patterns, and everyone's going to be in the same horse race together.
Yeah, there's 2 things I want to say. One is I totally agree with Dave. It's like these tools are going to be really, really good for small, extremely competent teams, like the team that we have. Just because like it'll allow us to do way more than we ever have before. And we won't have to deal with as much of the headaches of communication between people. Like one of the big problems with these tools now that you're so productive, like I can vibe code 10 apps and then the person next to me has no idea how to use any of these 10 apps. And so it really is hard to use these as efficiently in bigger groups and bigger teams. So I think it's going to create a huge amount of value
workflow problems, right?
for small teams.
That's what I've been saying. I think I mentioned to you last week. I actually feel like the technology's there, but the behavioral science, behavioral psychology, the adoption of human nature is
just so
got to
new
catch up.
that the process flow, right? To Daniel's point, there's new bottlenecks that are going to be created that we haven't worked through before and we haven't understood or don't understand yet. But back to Daniel's point, one thing I've said to a bunch of teammates in the last week is that, having lived through, Dave and I and you, Greg, are old enough to have lived through the PC era. Daniel was too young to experience that. The .com era we lived through, I've never seen in my professional career, including those two eras, anything that's moved nearly this fast.
Evolution's moving faster and faster, for sure.
Yeah. The second thing I was going to say is kind of more a general point, is like machine learning requires having data to build any system. It's the core, it's the fuel that powers it. When you're talking about the world changing or new things occurring, new regimes happening, you don't have any data to work from. So we can't predict how this new thing will affect the world because we don't have data on it. It hasn't happened before.
Right.
So, but it's a general thing worth keeping in mind is like, if you're going to try to make your predictions based on data, you have to have data to work with.
Oh, that's a good answer. It actually makes me want to segue into what the next topic, which is really understanding what you do in the modeling, when we talk about modeling in the marketplace and what actually you're trying to predict when you do this. I sit in the monthly update meetings with everybody, and I'm trying to learn as fast as I can. But understanding what you specifically do when we talk about modeling and predicting market outcomes, what are you actually trying to do in that role? I mean, obviously you want to win more than lose.
Yeah.
But take us through that kind of process.
So we model a lot of things. We apply the kind of same tool many places. For one, we have alpha models, and their job is to kind of say which things we trade, what is our expectation for the future? Are they going to appreciate in value or depreciate in value? We have models for risk. How risky are the different assets we could trade? We have models for volume and trading cost. How much will it cost us to put on any hypothetical trade? We have models for the correlation between different assets that we might want to trade. So we can manage our portfolio's risk. But the kind of tech behind all of these is the same. We gather a lot of data about how things have worked in the past. We prepare it in the right way, and then we feed it into these general purpose tools that predict the future.
And is prediction about being right all the time? I mean, are we right?
Ideally, yes. I would love to be right all the time.
Yeah.
Practically, no. In our industry, this is quant finance in our industry is the single most competitive application of machine learning in the world. And the reason is obvious, just because the rewards are so high and there's so many people trying to do it. And what that means is that the amount of predictive signal that we have to work with is very, very small. Like, I don't know if you guys have heard the efficient market hypothesis. Greg, I don't know. Barry, Dave, I know you have. Sure. But the basic idea is like, the markets are a random walk. You cannot predict them in the future given any access to data in the past. Everything is priced correctly and appropriately at all times.
We say shenanigans.
It's mostly true, though. It's like 99% true.
There's some edge there.
There is a tiny bit of edge. Yep. And that's what us and all the other competitors like us are competing to get out, that little bit of edge where they're not totally efficient. So bottom line, what that means is, no, we don't get 100%, but we might get 51%.
Well, that was what I was, because David, I've heard you say something. Tell me about the 51%.
Yeah, I like
accuracy.
to say, even though 51% of the trades go our way, 100% of our trades are the correct trades because they all follow the system. And statistically, we know that if we can maintain that percentage and they all follow the system, then we'll be successful.
Because you can learn a lot from the 49% that you didn't get right?
It's not so much that you learn from them, but you've got a statistical edge. So you have to have those because we can't get great. We haven't been able to get greater accuracy. But when you sort of roll up all those trades over thousands of trades a day, maybe over 1 million trades in a year, then statistically that's a very big edge.
It's like the casino. So when you go to the casino, some days you go in, you lose money. Some days you go in, you make money, you feel really good. But the casino every day basically makes money.
Wins.
And they don't win on every single person that goes in every time.
No.
But they win a little bit more than half the time.
I like that analogy.
And,
that makes sense.
those edges, if you can make enough of those bets, they accumulate into something very kind of very consistent, very profitable.
Yeah. Going to the sporting, because my background's sport, I heard Roger Federer once say that, you know, he won like 53% of the points he played or something. It wasn't actually a huge amount.
54,
and yet it was at 54%, and yet so it's that same kind of analogy, right?
Same
Coming
idea.
from that. Yeah. What about like, David, you've brought up to me once before groupthink, how that can affect the market. You know, we see it affecting the market all the time. Being that we're a quant fund, we're looking at data and we have these predictive models. Does that ever impact the modeling in a negative way or a positive way? Like sometimes I see the stock market, it almost looks like it's being run by, I don't know, what was that one stock that
Redditors.
Yeah, exactly. And Redditors, yeah, people that just go, let's boost this stock. Does that impact us at all? Are those things, like, does groupthink ever impact us?
Well, I'd like to say it's more of a guideline not to fall into groupthink.
Well, yeah, we don't want to do
Like
that.
we don't want to fall into
But it still could impact the market, right?
The fact that others do fall into that may be what creates the patterns that are available for us to trade. So it's what gives us our edge, is that we don't fall into groupthink. We don't assume that because the industry way of thinking of a way to trade is the right way. If the data tells us otherwise, then we'll go with the data. A good example is very early on. It was hard to raise money because everybody wanted us to trade specific kinds of trends. They said, well, there's papers about it, it works, and everybody thought it works. And our data conflicted with this, with it, and said, no, this actually doesn't work. Same with having stop losses on trades. We were able to show with our data that it doesn't work. And again, that was the group way of thinking, was this is how you should trade.
Early on, that must have been a pretty tough journey for you guys to get investors and others to let go of that.
That's why it took us a few years to get to meaningful capital.
Yeah.
We had to stay the course.
Yeah, because people are like, no, we know the way we've been doing it. You know,
It's
we're not going to
crazy.
change.
Like in the early years, you almost couldn't tell investors what we were doing because we were kind of applying the latest and greatest, best machine learning techniques available at the time. And they would ask questions like, well, how do you know that a black box system is like making the right trades? And we're like, well, we back tested it and we've analyzed it. It's like, it's definitely making the right trades. And they're like, but it's a black box, right? And we really had this hurdle to overcome where investors were really wary of like systems that were complex, even though they worked, obviously. But that has changed. That's totally changed nowadays.
One of my favorite things back then, Daniel, was to ask investors, and I would only do this in certain settings, you know, at the proper time, I'd say, how many times do you fly on a commercial flight and you are concerned that autopilot's on for 95% of that flight? Like you trust something with your life, and just because you don't understand machine learning as well as you might like, you don't trust that, you know, autopilot either, but you're allowing it to fly you 95% of the time. So sometimes that would land, sometimes it wouldn't with investors, but it was very difficult in the early days, to your point, that people didn't understand it, and they liked to talk to a discretionary or fundamental manager that would say, this is why we did this.
They want a story. Everyone wants a story.
Yeah, it's hard to give a story through the modeling. And then you don't want to give up your IP. So you're kind of like, we can't tell you anything. You're just going to have to. So at the end of the day, you build over time and they just see the scoreboard. Is that how you?
That was it. It was returns was the ultimate selling tool for us, right?
Yeah.
To show people. And we were patient and willing to be, consistent with our approach. And, but we had deliberation and debates about this, right? We would, say,
we would say we've got to be wrong. Let's back test this again and back test it again. And
right.
And I think groupthink is sort of like this peer pressure amongst scientists to go with what everybody else is saying. And again, we saw that in finance, and we were able to show with our returns that it was better not to follow the group and follow the data. And we see that today with the cholesterol myth.
In health, nice segue.
Everybody's saying you should get your cholesterol under 100, and the data keeps telling us over and over that the people with higher than average cholesterol living longer.
Yeah. Well, this is just what we're finding on the health side. And Daniel, I know you lent in a little bit, but you're also super young. I always feel like you get to our age, we start going, we really need to look at our health a little bit more. But the way we're approaching it through a very holistic lens, where what we've seen with the groupthink mentality is, get your cholesterol, LDL cholesterol, bad cholesterol, down to 50 or under 100 to minimize the chance of heart disease. But what we're seeing with that is actually you increase your chance of dementia, and David, tell me if I'm wrong with the numbers, but you increase your chance of dementia by about 200%. And so this becomes an argument of like, well, you can start to choose how do you want to die without sounding morbid, but it's kind of like, well, how do you want to die at the end of the day? If you're going to reduce your cholesterol right down, I'm sure compliance and legal are going to take all of this out, but let me keep going for a second. But it's like, if you get your LDL right down, your chance of not getting a heart attack is better, but the chance of having a long-suffering dementia for 10 to 15 years gets worse. And so this holistic approach is what we're finding in the data, and the team, David's team on the health side are using the same kind of modeling that you're doing on the VIM side. It's fascinating to see what's coming out.
Let me survey Daniel to see if he conforms to what we've seen in.
I go by data. That's good.
Physician. Yeah. This is more emotional, so you're gonna have to dig deep. So you're a young guy, obviously. If you think of your future from a health standpoint, what is the thing that concerns you the most? If you had to pick the common chronic areas of disease, everything from metabolic, aka diabetes, cardiovascular, liver, kidney, brain. What are the things? What's the thing that stands out in your mind as, I'd like to avoid that the most?
Probably the slow creeping, kind of crippling kind of thing that takes a long time to finish you off, but you see it coming for a long time. Yeah, that's probably the worst.
So when we've done this survey with broad groups of people, it's generally brain health is the top of the pack for responses, right? Because maybe it has some of that gradual effect that you're describing, and I think a lot of people don't want to go crazy, so to speak, right? They'd rather have even a widowmaker or something that takes them out in their 70s or 80s than have this 10-year, 20-year period where they can't remember a loved one's name, right? So anyway, it's back to this point on LDL. It's looking at these things holistically. So when you think about going back to your experience with lung cancer detection, competition, what you've done at VIM, when you think about the intersections between finance and health and how we can apply machine learning to the health field, is there anything that's percolated in your mind as exciting that you're either seeing us doing or things that you think come down the road?
So I really like what you guys have been doing with just analyzing a blood test. It sounds simple, but you go get your blood tested, the results are very cryptic when you get that back. You look at that and you really have no idea what it says. I was looking at a blood test this morning or yesterday, and it was all these different things, and there's a reference range, and you're either in it or you're out of it, and it doesn't really tell you much.
Did you upload it yet into our system?
It was not mine to upload, but I have mentioned the idea. So I think having just analytics on that and explain it to the regular kind of everyday folk is great. That's a product. Maybe it's one that's out there already, but that's useful.
I'm curious, David, for you, being that you've used your knowledge and expertise in the marketplace, climate, through the foundation, now in health, are you finding that putting your knowledge and expertise into lots of different areas is making you better in each area? Because you're having to look at things from different angles in different areas, health and the markets, although different, still have similarities in the sense that there's so many markers that you have to look at?
Absolutely. It's always been my thing to look at data in a lot of different fields. That's why I participated in a lot of competitions earlier in my career to just get a taste of a lot of different kinds of data sets. Mm-hmm. And knowledge from one field always carries over. Mm-hmm. Like the knowledge from modeling in finance has carried to health, and some of the algorithms we develop in health actually applied to finance. And doing these data competitions once in a while to find some other area, we always learn something new.
Do you think it's harder? Which one's harder, the markets or health? Is that too simplistic of a question?
It depends what the goal is.
Yeah,
If the goal is to beat aging, then health will be harder. Mm-hmm. In terms of what we're doing right now and analyzing the blood test, I would say finance is harder because these are very strong patterns we're finding in health compared to very, very weak patterns we find in finance. But in terms of getting the data flows correct, understanding biases in the data, they're both very hard. You get just as many, if not more, biases in our data set, which leads to a lot of incorrect analysis in the health.
Are we getting enough data from health too? I know we have the UK Blood Biobank and we have these things, but we've talked about proteomics, genetics. We metabolomics. There's so many areas that we want to get more and more data. I feel like the markets you might have more data, but it can be confusing. Like there's a lot to clean up. But with health, do we have enough data?
Oh yeah, we have data on millions of people now followed over more than a decade from various biobank studies, some partnerships, and we still need more data sets. Because different data sets have different qualities. They might study different biomarkers, different outcomes, different interventions, and how they affect people. So we're still looking for more, but plenty of data sets out there in both fields. And I would say you definitely have more people we can study than there are stocks in finance. So in finance, you're limited to a few thousand stocks that are meaningful to predict. But you also have many data sources on those. You got much more standardized information on those. So I would say you have like more depth per data element versus more data elements. But it's essentially the same skill set, the same issues, and we're just building on what we've been building on as a data science
team. It's all problem
team.
solving, like you said early on. You find people that love problem solving, and it's kind of like for you, I see you've been doing this for so long. And it's like, okay, where else can I point and shoot, and what other problems can I solve?
Specifically, it's using data to solve a business problem, and it took a while to. I mean, it was a thing to be a quant investor for a while, and using data to solve quantitative problems in finance was more of a known thing. And then we saw we could solve very big problems in the health field that haven't been solved using good data analysis. And basically, that's where we're looking to apply our skills right now.
It seems like data science, it's a great field to be going into right now. I mean, maybe for the last 20, 30 years as well. But when we took a bit of a dive into AI and large language models, but I mean, this world of understanding what the data is telling us and doing our best to predict outcomes, it's a fascinating area to be in. Like, I think if I'm talking to a younger myself, I'm like, dude, forget the swim, bike, run. This is a world of figuring out what this can happen. You guys wouldn't change a thing, would you?
No. Well, being a data scientist now is a good thing. When I started my career,
what is that?
The field didn't exist.
Yeah.
But people were collecting data in all these areas, and I kept thinking, well, why aren't people using it? Why would no one pay me more than $100,000 a year to be a top data scientist? And it just wasn't a thing.
What is a one elevator pitch? If you hop in an elevator and somebody says, "What is data science?" What would you say, Daniel?
It's a problem-solving method where to solve a complicated problem, you first gather lots of data about that problem, examples, and then you train a statistical model that extrapolates from the examples to predict some outcome that you care about. So, for example, you can say, I want to predict price of houses. The data I'm going to use it is the square footage of the house, how many bedrooms, how many bathrooms, and so on. You collect this big data set of all these measures of how valuable a house should be, and then you also collect the sale price. And you build this model that associates the number of bedrooms, the square footage, the number of bathrooms to a sale price, and you can apply it to new houses. You don't know the sale price yet. You get a new house, you want to list it for sale, you want to know what price, you plug it into your model, it looks at the similar houses that have sold, what prices they've sold for, and gives you a prediction.
I mean, can you build that now on Claude or what? I'm trying to find a house right now. You can actually build that really quickly. You were telling me last week you built your own web app really quick for an hour or two. That's fascinating. I love that, by the way. I need to stamp that in my head. But look, this has been fantastic. We're running on an hour right now. Do we want to throw any rapid fire questions at Daniel?
But before we do, we got to give Daniel some props. He's a bit of a Renaissance man. He actually is a creative designer. He created the shirt that David has.
David, can we get the back of it? I'm not sure. It says
maybe we can get a picture.
It says "Stay positive." We might have to just get a photo and we'll add it into
that. It says more than that.
It says more than that. I'm sorry, I didn't mean to cheapen it.
So Daniel's very invested, as you guys know, in our internship program, and we went to a conference and he made those shirts for the conference.
Yeah, and we all got them. No, it's awesome.
Good stuff. So let's do some rapid fire.
You got a rapid fire?
You start.
All right, mate. Let me think.
We got some from the audience.
Hang on, we got one from the audience. Stephanie, what do we got?
Why should I trust a data scientist with my health?
Okay, the question from the audience is why should I trust a data scientist with my health? David and Barry,
this may not be rapid fire question.
This might be, that's a deeper one, but
it's a heavy one.
I know it is one that Stephanie's wanted to ask a few times. Stephanie's our marketing expert sitting over here.
What else would you trust? I mean, is there any other way to make decisions that's better than looking at data? If you could look at thousands of people that have very similar biomarkers and health metrics to yourself and see what their outcomes were. Would you rather look at anything else?
And see what interventions actually improve their biomarkers, right?
Yeah. I mean,
it's data that drives good decisions, right?
I like that as it's funny, you mentioned that we can all say we all have our own experiences, we have our own gut intuition. We learn from our mistakes, we learn from our successes, and we're almost our own data sourcing going on through experiences. But kind of what you're saying, we can do that for the individual, but we can also unpack thousands of people that are very similar to you to have even a stronger prediction of health.
Yeah. And the alternative is what? You ask your parents, I don't know. You ask your friends.
Yeah.
You ask a doctor that's seen, a variety of patients of all different walks of life, maybe no one that's quite like you.
Mm-hmm. I like that. Great answer, especially being put right on the spot. That was good.
I'm ready for the next one.
David, do you have a rapid fire one?
There was another one from the audience.
Yeah.
What advice do you have for young professionals now that AI is advancing so much and replacing so much of the manual work? Is the response now to learn how to use AI rather than learning the data science basics?
Learn both.
So just so we can get it recorded, the question from the audience is basically, what advice can we give to young people? We discussed how AI potentially could be removing a lot of jobs. What advice can we give them in their young careers?
Yeah, don't give up is one. You still have to learn the basics, but you should learn the tools. Mm-hmm. The tools that are coming out now can make you 10 times more productive than many years ago.
Don't shy away.
And you've got to embrace them. You've got to get up to speed with the latest and greatest, and you've got to really commit to using them. But with that said, also you have to learn the basics and be able to think for yourself. You can't just trust the machines with everything.
Oh, well done. Yeah.
So my question, Daniel, you have seen firsthand that we've deployed AI for, mundane, let's say simple, repeatable tasks. You've also seen, you personally have been involved in applying AI to very sophisticated problem solving. So when you think about that spectrum, what are the jobs that you think get eliminated the fastest in white collar America?
I don't think my commentary is going to be especially novel here, but it's basically the more routine and repeatable will be eliminated first. But at the end of the day, there's not much which can't be automated. It's the models are only getting better. Every 6 months they get much better than they were before, and the way they are right now, again, February 2026, they can do a very impressive amount of work, and they're only getting better. So at the end of the day, maybe the thing that's hardest to eliminate is person-to-person communication and trust. You look someone in the eyes, you shake their hand, you stand in the same room with them.
Until we can do that with robots.
No, but I still think there's an energy in between. You guys have heard me say this.
I think back on the guidance question, though, there's something you said for make an effort to be guiding these models. Like everybody's using these language models now, but AI models need to be guided. They learn what you tell it to learn. They work with the information you tell it to work with. So just like we've been guiding machine learning algorithms for many, many years now, I think if you see yourself as a guide of these language models to do a task, and you can guide it well, then I think that's a way to use it rather than be replaced by it. Versus like, don't think of it as a system to help you stop thinking and let it make decisions for you. Guide it to give you the information to make the right decision yourself, and then that'll give you the edge.
Yeah, and I think like a really intelligent, smart user that knows a lot themselves will be a better user of the tool also. It's really a multiplier on productivity and ability.
I like how you said it's almost like lean into these things, these tools. Sure. And I've mentioned it to a few other members on our team. It's like, just hop in the sandbox, and go play. And don't, like, you're using them to predict outcomes in what you're doing in the markets is huge. But you got to start somewhere. Just lean into these tools, hop in the sandbox, have a little play, and you'll actually realize they're not as scary as they are, but you need to uptrain yourself to be better.
They're a little scary.
They are a little scary. But I'm trying to.
You got to know the tools. If you don't get on board, the train will leave without you.
Yeah. Well said, Matt. I think this was a fantastic episode, guys. I think we'll wrap up there. Daniel, really appreciate it, mate. I know you got a lot on your plate, but really just to have you sit here and talk everything to do with modeling and AI and your whole journey has been fantastic. So thanks, mate.
Thanks for having me.
Yeah.
Thanks for coming.
All right. Cheers, everyone.